as Solana gets larger, it's harder and harder to replicate those past returns. And so a lot of the tourists who are in Solana, because it's done so well from 7 to 170 or 160, because things have improved off of a very low base, right? The network had just started almost when FTX blew up. Well, you're not going to...
In cryptocurrency, the notion of set 4-year cycles is a thing of the past. American businessman Arthur Hayes contends that liquidity, not time-based cycles, is what really drives market movements. Everything is significantly impacted by the global money markets, which are fueled by changes in liquidity, the expense of life, investment portfolios, and, above all, crypto markets. In a startling interview, Hayes links the sharp increase in cryptocurrency prices to the Federal Reserve's extreme measures. The Fed's reverse repo facility reached an incredible $2.5 trillion in September 2022, bringing previously unheard-of levels of liquidity to the economy. This liquidity was progressively decreased over the course of the following 18 to 24 months, which led to a bull market, particularly in cryptocurrencies. Hayes attributes the record-high values of assets like Bitcoin and Ethereum to this change in liquidity, which was sparked by Janet Yellen's strong fiscal measures. The antiquated 4-year cycle theory should be forgotten. The real factor propelling the next wave of cryptocurrency is liquidity.
When else asked me this, like, oh, it's going to be the 4-year cycle. Like,
Yeah.
Why try to be prescriptive? Just adapt to what is. I think if you try to put these prescriptive, oh, it's a 4-year cycle, therefore in the second or third year, whatever it is, I must do this. Well, okay, if everyone does that, then you don't get the result of the past. So I don't know how many years this cycle is.
It doesn't even matter.
It doesn't matter.
Yeah.
Look at the liquidity cycle. Bitcoin, I think, for the first time, is very clearly directly related to liquidity. And China was in the past. It was the dollar this time. Maybe it goes back to China and then maybe the global aggregate. But the tech is solid. The tech changes less and less, obviously, as Bitcoin gets older and older. And the thing that really matters is how much fiat is being debased. How fast, from where, what's the pipe? Understand that. And I think you get a much better sense of where Bitcoin and crypto goes. Is it a 4-year cycle? I don't know. Could be 4, could be 5. Could be 6, could be 10. I don't know. Doesn't matter. I still haven't gotten all the numbers together, but essentially, if you take a look at, so let's say post FTX blow up, right? Solana went down to what, $7, and now it's 170 or 760, something like that, right? Like amazing performance. And ETH went from what, like, I don't know, 1,200 to 2,500, kind of like double-ish,
Yeah.
right? And so like, why has Solana done so well? Well, on a sort of percentage change basis, the profitability, if you own Sol and stake it and become a validator, has dramatically improved over the past sort of 18 to 24 months. And it correlates perfectly with the rise in the price, right? Revenue's up because transactions are higher. You have you have MEV, you have the sort of the priority fees and all these sort of things, and and the validated rewards from being a validator, right? So the profitability of the chain has improved dramatically, and therefore the price has done very well. Now, ETH already came into this thing as the top dog, right, in terms of like size of the network, and so on a rate of change basis, obviously didn't go down as much either, right? Solana went from 250 to 7. ETH went from, I don't know what, like 3,000 to 1,200.
Yeah.
50% decline.
4,500, yeah, something like that.
And so, but everyone in ETH thinks, oh, it should be up 10,000. Well, show me $10,000 worth of improvement in the underlying metrics of the percentage of circulating supply that has been burnt because there's been transactions on the network. And so that hasn't happened, and therefore the price hasn't gone anywhere. But law of large numbers tells me that as Solana gets larger, it's harder and harder to replicate those past returns. And so a lot of the tourists who are in Solana, because it's done so well from 7 to 170 or 160, because things have improved off of a very low base, right? The network had just started almost when FTX blew up. Well, you're not going to replicate that again. So it's going to be hard going forward to replicate the past success. And I think once that narrative shifts and they get a bit of sour grapes, then you start seeing more sort of like activity back in ETH. They're like, oh, well, guess what? ETH, L1 plus some of L2 transaction volume is higher than Solana. The transaction fees are coming down. It's more secure because in a proof of stake situation, it's got a higher total notional value of the network. Therefore, it's more secure. And if we believe that there's dangerous state actors or corporations that want to take down competing sort of free association of people using compute, then wouldn't you want the strongest chain, which is the one that has the most value, to be slashed? So I think all these things start to matter when the velocity of change slows down in Solana, because it's past success breeds future. I think it's so fundamental to what ETH is that unless you're saying that there is no longer any endogenous yield in ETH, the fee is no longer paid in ETH to use the decentralized computer that's hosted on it, I don't think it can ever be money in the way I think about money.
Interesting. So you think because it has utility.
If you've went to $100 million per ETH, that's actually a problem. Because if it's too expensive to use ETH as the commodity that runs the computer, then nobody uses the computer. And so there is a price at which ETH is too expensive, and then it becomes not useful anymore. If the price of oil went to $1 billion per barrel, then the economy collapses and nobody uses oil anymore because it's too expensive. It's the most developers. And if we think about the most innovative new things in DeFi or infrastructure, they all start on ETH. Solana, there's copied on Solana, maybe it runs faster or whatever, but they start on ETH. And so I still think ETH is sort of the daddy chain. It sponsors all the idea that has some of the smartest people developing new things to take this industry forward. And therefore, I think it's, on a long-term basis, a better asset to hold. I love trading Solana. It's great. It's liquid. It moves fast. It's got a very good community. Do I want to hold, a large portion of my portfolio in Solana? No. I don't have the exact number, but there were some pumped up fun statistics in terms of like the longevity of a meme coin at particular nominal values of market cap and the percentage of the total supply of all coins issued that made it to that level. So to get over like a $500 million market cap is like, there might be less than 50 of these things.
Right. Yeah, it's like one in 100,000 or something.
Yeah. And so, but obviously, if we're talking about meme coins as an attention asset class, you need to be sufficiently large before you get the most amount of inflow into your project. So if I'm not sitting at my computer all day, I don't have time to try to find the next, $10 million to $500 million market cap meme coin, then once something crosses 100 million to 200 million market cap, and I somehow hear about it, whether it's on Twitter or somebody mentions it on a podcast or somebody's chatting about it in a chat that I follow, then I'll ape. Because, okay, it's proven that it has enough virality to make it across these very hard hurdles. And therefore, it's more likely to get, Matt Levine and Money Stuff on Bloomberg talking about how dumb it is that these crypto idiots are buying this. Right? When I see that, I want to own that because he's talking about it. He heard about it. So that means all these other